hospital where she was admitted and she was discharged and taken in custody by the police officers. Now, the cops are probing the angle of destruction of evidence. Remember, the victims of this accident were taken 19 kilometers away to a hospital and not any other hospital which was close by. 19 kilometers away from the accident spot, and that has raised many questions, and many details are now coming out from the FIR. It seems that the victim's wife asked the killer driver to ensure that they go to a hospital close by. So we have India Today's Arvind Ojha, who is bringing us details of this accident. Let's take a look.
गगनप्रीत को देख पा रहे हैं आप, लेकर दिल्ली पुलिस की टीम यहाँ पर पहुंची हुई है। अब यहाँ पर गगनप्रीत से जो डीसीपी रैंक के अधिकारी हैं वो पूछताछ करेंगे। बकायदा नॉर्थ दिल्ली के अस्पताल से कस्टडी में लिया गया और उसके बाद आप देख पा रहे हैं महिला पुलिसकर्मी भी यहाँ पे तैनात है। गगनप्रीत से हम बात करने की भी कोशिश करेंगे यहाँ पर कि आखिर क्यों गगनप्रीत क्यों लेकर गई थी। आप देख पा रहे हैं जो धौला कुआं में गगनप्रीत को दिल्ली पुलिस की टीम लेकर पहुंची और डीसीपी रैंक के अधिकारी अब गगनप्रीत से पूछताछ करेंगे। बीएमडब्ल्यू कार यही गगनप्रीत चला रही थी और उसके बाद खुद गगनप्रीत ने कहा कि नवजोत और उसकी पत्नी को नॉर्थ दिल्ली अस्पताल लेकर चलो, जैसा एफआईआर में खुलासा किया गया है। तो फिलहाल गगनप्रीत को धौला कुआं पुलिस चौकी यहाँ पर लेकर पुलिस की टीम पहुंच गई है। यहाँ पर डीसीपी रैंक के अधिकारी उससे पूछताछ करेंगे और फिर कुछ देर बाद आधिकारिक तौर पर उसे गिरफ्तार किया जाएगा। कैमरामैन रितेश के साथ अरविंद ओझा, दिल्ली आज तक।
Clearly, the matter is being given utmost importance by the Delhi police. India Today's Shreya Chatterjee also joins us now, who's been tracking this case and also the arrest of Gaganpreet. Shreya, tell us what's happening right now. Gaganpreet is going to be interrogated by no less than DCP level officers.
Well, absolutely. DCP Southwest Amit Goel, he's right now inside the police chowki of Delhi Can. This is the police post Shubroto Park, where the DCP is present, and Gaganpreet immediately after her discharge was taken into custody by the Delhi police team, who have also brought her over here. So after long interrogation, we will be seeing her face all those questions, especially those surrounding the fact that why was a hospital 19 kilometers away chosen. Now, this particular police station is under whose jurisdiction the accident had taken place. It is the same Dholakua region that we are talking about, barely 5 minutes away from where we are standing, pillar number 67, where that fatal accident took place. And from this, which is the southwest district, to the northwest is where the accused had taken the victim. So we've already seen the Delhi police record statement of the driver of that Omni van who had taken the victim, and now it's Gaganpreet who's facing the questions on what really transpired that such a sudden decision had to be taken. Delhi police has also slapped fit charges of death by negligence and destruction of evidence. So she is going to face a very difficult round of interrogation so far as the entire matter is concerned.
Right. Thank you, Shreya, for all those details. So we'll be keeping our eye on this case as it develops, and we'll keep bringing you all the latest updates and details. Now let's go across to Sakshi Batra of Business Today with all the updates of the markets. Sakshi, over to you.
Good afternoon and welcome to Market Closing on our brand new collab show between Business Today and India Today Television. It's 3 p.m. and we are here to get you all the market closing action. First, let's take a look at what's hot in the corporate and financial space. Markets trade flat in a lackluster session ahead of the US Federal meeting. We are also given to understand that the Nifty is currently holding across 25,100 odd mark. Sensex hovers around 81,900, while the Nifty Bank has crossed 55,000 mark for the first time since August 25. Railway stocks, including the PSU names, have rallied in trade today, including RailTel, RVNL, IRFC and Ircon International gaining up to 8% in trade following increased order inflows in the sector. A big move could be on the cards for the insurance sector. Finance Minister Nirmala Sitharaman has said she hopes the Insurance Amendment Bill will be introduced in the upcoming winter session of the Parliament. The bill proposes 100% FDI in the sector. Wholesale inflation rises to 0.5% in August, ending 2-month negative streak. Food, manufacturing and non-food articles drive the surge after July's 2-year low of minus 0.58%. Today is the last day to file your income tax returns for assessment year 2025-2026. So far, the Income Tax Department has received over 6.69 crore returns, with over 1 crore more expected today as taxpayers rush to avoid penalties. Let's take a look at how the markets are trading in the last half an hour of trade. Remember, viewers, after 8 consecutive sessions of moves on the positive side, and what we've also seen for the markets is that we've logged in 2 consecutive weeks of gains as well. In fact, the markets did shut shop with a 2-month high on Friday evening, but we've started off on a volatile note this fresh and new week. You can actually see the Nifty hovering around the flat line in trade, 25,074. So we've slipped below the 25,100 mark now. 0.1% of a loss is what you see at this point in time. What's creating some pressure on the market? It's the IT stocks, the heavyweight sector that had been giving the market some support over the last couple of weeks. We're also looking at pharma space that's also dragging in trade. Autos, consumer durables have also slipped in trade. Remember, the auto stocks are also in focus as the sales for the auto companies have come in lower vis-a-vis the last month as well, and have been on a dragging trend right ahead of the GST rollout is concerned. Now, what you're also given to understand is it's the real estate sector that's outperforming in the trade today. Look at the top gainers on your screens: Jio Finance, Bajaj Finance, Zomato, that's eternal now. Those are the top stocks that are actually doing very well. Coupled with it, UltraTech Cement, Reliance Industries, even names within the Adani group like Adani Ports, that's also doing well at this point in time. On the other hand, you see M&M, Cipla, Asian Paints as dragging 1.5% in trade. You're also looking at Shriram Finance, Dr. Reddy's and Eicher Motors continuously dragging. IT names like Infosys, remember last week this was the key trigger for the IT stocks to move up higher in trade, has dropped by about 1%. Let's actually welcome our guest on board now. Mr. Pankaj Pandey, the head of research at ICICI Direct, is now joining in to share with us his views on the markets. Pankaj, welcome. Good afternoon to you. Good to have you with us. Well, I want to first understand from you, how are you assessing the mood in the markets right now? We've already had 2 weeks of consecutive moves on the positive side, of course, led by a lot of positive news flow that's actually emerging from the domestic markets. But will it sustain till the time actually we see the GST rollout on September 22nd? That will be the Monday of next week.
Yeah, hi, good afternoon. Thanks for having me. I think what we have seen in the last 1 or 2 weeks is, again, US softening its stand on tariff has sort of lifted the sentiments. And I think our sense is that with a larger possibility of Fed cutting rates, it is very much possible that we might see a bit of a trend reversal in the FI or FPI outflows, which again could be a big boost for a big sector like, say, banking and IT. Now, for IT, again, the challenge would remain that the near-term demand or whatever guidance you look at is still sort of muted. But banking overall is in definitely good shape and has seen a decent amount of selling in the recent past, and it's a heavyweight sector. So our sense is that this sentiment is going to probably lift the market further to 25,800 kind of a levels. And again, it will be sort of probably banking is going to do the heavy lifting. Otherwise, our sense is that for the domestic-oriented sectors, while September quarter numbers may not make much of a sense given the fact that you will see demand postponement because of lower GST rates, but Q3 onwards is where we would expect earnings to sort of pick up. Q1, we had earning growth of about 6.5%. And for full year, we are still keeping at about 8-odd%. Our sense is that this number can get incrementally revised upwards. But yes, the drag which financials and IT were creating, I think, is possibly coming to an end, and which is why we are sort of constructive on the market. And BFSI, again, like I said, could do the heavy lifting.
Sure, BFSI to do the heavy lifting. Now, Pankaj, help us understand when it comes to the changes in the portfolio after the GST rationalization and the next generation reforms have been announced. Have you made changes to the clients' portfolios as well?
So I think from a consumption perspective, while yes, overall sense is that the consumption is expected to get a boost, but we are only looking at the premium and leg of the market, and that is where you'll have selective players. So, for example, in auto, auto is a good play on the discretionary segment. I think the sector has already done well, up about 13% but we still like this entire pack, given the fact that you'll have further benefits in terms of HPA commission kicking in from next year, while volume growth can lift up to say 6 to 8 odd percent, probably 10% from mid-single digit. But price-led growth can still be there because of the premiumization. In addition to that, segments like hotels look very attractive to us. I think demand growth is still at 9%. And then you have selective consumption categories like even hospitals or even alcohol or liquor categories, which are expected to sort of do well. So consumption, we are selectively positive. I think capex is, as a theme, looks a lot more attractive from a 5 to 7 year perspective.
Okay, got that. So when we talk about autos, let me dig a little deeper there. It has clearly shown the maximum amount of enthusiasm when it comes to the GST rationalization news flow is concerned. The stocks are up anywhere between 6 to 17% from 15th August, the time when Prime Minister Modi announced that, big GST reforms are going to be coming in. I want to understand, your top preferred list of stocks that you are looking at this point in time? Spread it across four-wheelers, two-wheelers, three-wheelers at large, maybe even the tractor makers as well. I'll also just give this highlight to all our viewers. Remember, car sales have fallen for the fourth consecutive month in August with 321,840 vehicles dispatched. That's down by 8.8% from last year, as manufacturers are now adjusting their shipments ahead of the revised GST rates. So three-wheelers and two-wheelers have still risen marginally, but we've seen that when it comes to the passenger vehicles, they have seen a slip, from the last time around as well. How are you looking at the top choices?
So I think in the auto, our sense is that on the passenger vehicle side, when you look at the used car market, that is nearly 1.3 times bigger than the new car market. And that is where the price differential will sort of come down. And which is why we are positive on the entire PV as a space. So we like company like Maruti with a target price of 17,160. M&M again is a play on both SUVs plus tractors, so that looks attractive to us with a target price of 4180. We even like the CV players, where we expect the demand to sort of get revived with something like Ashok Leyland with 155. Besides that, Bajaj Auto and Eicher Motors also look attractive to us. Even on the auto ancillary side, we like companies like say Sansera Engineering, Lomax Auto, Steel Stick Wheels. So these are some of the names. So besides that, I think Apollo Tyres and Exide Industries are the other two companies which we prefer in the auto space.
Fantastic. So hold that thought there, Pankaj. I'll be coming back to you with some of the other sectoral trends and some of the other stock choices across the markets that you're looking at positively at this point in time. But remember, viewers, it's also a time to really look at. Today marks the final day to file your income tax returns for assessment year 2025 to 2026. Now, so far, we've given to understand that 6.69 crore returns have already been filed, and the number is expected to swell by about 1 more crore filings on the last day alone. Filing numbers have already seen a steady growth path. Last year, we had seen about a 7.5% surge, with total filings crossing 6.7 crore. And this year, the figure could potentially touch 7.8 crore returns as well. The rush today highlights how taxpayers are racing to meet the deadline and to avoid the penalties and on refund delays as well. Let's actually welcome our other guest to join in on the panel. We have Gauri Chadha, tax expert, now joining in to share with us what should investors be keeping in mind, taxpayers be keeping in mind in case they still haven't filed their returns in today's trading session as well. So Gauri, warm welcome. Good to have you with us. Last day to file the ITRs. Tell us, a lot of people would still be remaining, like we have given to understand. 1 more crore people are expected. So what should those taxpayers do if they have still not filed their returns?
Thank you, Sakshi, for having me on the show. So it's a very challenging day for the taxpayers and as well as the professionals because the site is not working properly and people are unable to download the AIS. So last minute, if you are filing your return because still 1 CR returns are pending, I think you need to be sure that you review your AIS and 26AS before filing your return because there are challenges while downloading the AIS and 26AS. You may end up filing it without reviewing that. And trust me, when you will see your AIS, you will see a lot of income and TDS which has been reported under your PAN, which you are not aware of, or maybe you don't remember anymore. So don't do this mistake of filing the return without reviewing your AIS and 26AS.
It's a very important point. A lot of taxpayers would not have even thought of that, but thanks a lot for bringing that out, Gauri. There are a lot of other FAQs that a lot of people would want to know, so I'm going to be asking you a few scenarios that you could help us with. There may be a lot of people out there who may be thinking that if their income is below the taxable limit, remember February onwards, we actually have heard the Finance Minister increase the tax base to 12.75 lakhs, where people do not need to file their taxes. But when it comes to returns, do they still need to file their return if their income is below the taxable limit? That's the key question.
So, Sakshi, this is a confusion which everybody has, and that the basic exemption limit has been increased to 12.75, which is not true because if your income is 12 lakhs or 12.75 lakhs, you still have your income above the basic exemption limit, but below that you are getting rebate in the tax paid. So you have to file your return. If your income is below the basic exemption limit, which is 3, 4, 5 lakhs, in that case, you may not file your return. But if you are falling under any of the categories, like if you have spent more than 2 lakhs in foreign travel, or if you have paid your electricity bill of rupees 1 lakh or more, or if you have deposited cash in the bank account, 1 CR for current bank account and 50 lakhs in savings bank account, or if you have any foreign assets or foreign income, you have to file your return even if your income is below the basic exemption limit. And in case the income is below exemption limit, but your TDS has been deducted, then of course you have to file, otherwise you won't get your refund back.
Okay, so those are very important clarifications. I hope all of you are noting all of that down, that Gauri is really telling you some very important tips and, things that you must keep in mind in case you still haven't filed your ITR. A lot of people would still want to know what happens if they actually miss out on filing the return today.
See, if you miss out on the return filing today and there is no extension, and today is the last day to file the return, then you can still file the return till 31st December. And but you have to pay penalty of rupees 5,000 if your income is above 5 lakhs, or if it is below 5 lakhs, you will have to pay a penalty of rupees 1,000. This can be increased with interest, because if there is any tax payable, then there is interest also which will be charged under 3 different sections. And accordingly, you have to pay that amount as well. So that interest would depend on the amount of tax payable, but this penalty will remain same for everybody.
Okay. Help us understand, 2 more things. A lot of people would want to know that, okay, just to file the return so that it does not come into the penalty category if somebody files, but there are a lot of mistakes. Can one still go ahead and revise those returns going forward from here? 2, there's also an essential fact that everybody needs to e-verify their tax returns now, because if they do not complete this step, it is considered that your returns are incomplete. So how do you go about it if you have forgotten to e-verify by today? So 2 questions.
So, first of all, if you want to revise your return, if you later on realize that you have missed out on something or you have incorrectly mentioned any detail, then you can revise your return again by 31st December. But you have to keep in mind that if you are revising the return and you are increasing your income or increasing the refund and decreasing the income, in that case, you might end up having more chances of getting a notice. Although I'm not saying that if you are going to revise your return, you will get a notice, but be sure that if you are revising, you are doing everything correctly, and then you can easily revise. There is no limit on the number of times you can revise. You can revise any number of times. Whereas e-verification is concerned, you have a lot of options to e-verify the return, and of course that digital way of sending the physical copy to CPC is still there. You have 30 days to e-verify the return or verify the return.
There's still time.
And only after that the return would be processed. Yeah.
Okay. Lastly, Gauri, help us understand if somebody is facing, like you also pointed out, the site is not working, incometax.gov is not really working properly. And if there is too much of a rush, if the site crashes by midnight, what is the hope? Can the deadline be extended? And two, what help can one look for?
So, of course, actually, we are hoping for an extension, but till now, since there is no news, we may not get any extension. The site is definitely not working properly. There are issues in downloading AIS and 26AS. The third-party softwares have been kind of blocked, and the challans are also not fetching. So basically, if you are facing such issues, the department has tweeted also. They have their email ID, they have their chat box, they have their online grievance portal.
Right.
So you can go there, tweet or chat with them. Although I'm not very sure about how many solutions will be given, but these are the alternatives. Yeah.
Well, the hopes are that the site works properly. Thanks a lot, Gauri, for giving us all those insights. And I'm sure all of these tips will really help all the taxpayers out there who've still not filed your ITRs right now. But it's time for some breaking news, viewers. Export boost for India is being seen as fresh market for India's seafood exports could be opening up as well. Karishma Sudani is joining in to share with us more on these details. But remember, it's the 13th round of India-EU negotiations that have got completed. Remember, EU has listed 102 fishery units for imports from India as well. And new markets for India's shrimp, squid and fish is being talked about now. Remember, European Union markets are crucial to beat the US tariff barriers for India at this point in time. This is the 13th round of India-European Union negotiations that now stand completed. India and US trade deal may be inked by the end of this year is also something that we are given to understand at this point in time, but seems like there is some light at the end of the tunnel, cushion that could be given by way of the India-EU export boost that we could be looking forward to as well. That's something that we are clearly looking at as well. Of course, this is crucial at this point in time when India has been imposed by a 50% tariff by United States of America, especially on the export-oriented sectors. Talk about fisheries, for instance. We have been seeing the likes of Avanti Feeds, Apex Frozen Foods. These are the stocks that have reacted negatively to the 50% tariffs that have been imposed on India and the export-oriented sectors. Now, apart from this, we are also looking at an impact on textiles, for instance, as well. But what we are given to understand is that in the latest round of negotiations that have happened between India and the European Union, there could be an extended export boost that could cushion the impact of the 50% tariffs on these kind of exports. All right, let's go back to Pankaj now. Pankaj, bringing you back on this story as well. Remember, US tariffs have been of critical nature and markets have reacted on these news, tweets, everyday statements right from April up until now. Help me understand, Pankaj, what's your thought process in case the negotiations with EU, sound positive for the export-oriented sectors, especially for the fisheries? Is that going to be a big positive for this sector? Would you look at it?
So, Sakshi, probably I may not be able to comment on fisheries, but textile is what we cover. So we have a company under coverage called Gokuldas Export now. Overall sense is that this company would look to sort of do more of business with lower tariff destinations like, say, Bangladesh or Sri Lanka or Africa. And in the interim or for the next 1 or 2 quarters, company is taking a hit on the margin. So margins could come down from 11 or 12 odd percent to 3 to 4 odd percent. But all is not lost because with UK FTA, there is a expectation that the current $1 billion kind of an export can jump to $2 billion. With EU, expectation is that from $5 billion, we can get an incremental export opportunity of about $2 billion. And I think companies are looking to sort of diversify from being concentrated in US market, and which is why there is a hope that some of these companies can deliver double-digit kind of a growth in 27-28. This year is expected to be a challenging year, but all is not lost. So, and I think in case if you are able to do the tariff deal with US, even with a 20-25% kind of a tariff, I think our sense is that probably risk reward is turning attractive for a lot of these stocks.
Okay, fair point. Apart from the sectors that you talked about, especially the textiles, what are the other sectors that you're looking at? When we talk about the export-oriented sectors, we also usually talk about the IT and the pharma sectors at large. Now, we do know that at this point in time, there is no direct impact of any tariffs on IT because it's the service-oriented sector, and on pharma, where we are given to understand that some form of separate tariffs may be announced later and that we will have to tackle on a later front as well. But what is your approach on the IT sector and on the pharma sector? Large part of their revenues come from abroad, from countries like US and Europe.
So I think on the IT sector, our view is still sort of constrained by the fact that we still don't know how the tariff situation will pan out and the consequent impact it will have in the US in terms of inflation and also the kind of deterioration we will see in the overall economy. So that's a sort of a big question mark. While deal wins have been good, but conversion of those deal wins into revenues is still sort of not happening, and we are not too sure that we'll get clarity even next quarter as well. So IT again, while yes, stocks have corrected, but we are still not chasing some of these names. Pharma again, I think overall the threat still sort of lingers on whether 100%, 200% tariff. So that is also sort of a question mark. So I think at this point in time, it is better to look at some of the sectors which are domestic-oriented nature. So for example, in the overall pharma and healthcare, I think hospital is one space it looks relatively a lot more attractive. I think this is one of the few segments which can keep on growing at mid to high teen kind of a growth rate with pretty good margins. So there we have, or we like companies like Apollo Hospitals, Narayana Hrudayalaya or HCG. So I think one needs to be very selective in the export-oriented sectors. Not everything can be chased at current levels.
Okay, so domestic-oriented sectors, including hospitals that are least impacted or not at all impacted with all of these external shocks that we are seeing and uncertainties at large, is something that Pankaj is clearly positive on at this point in time as well. Let me also ask you, when Pankaj, when we look at the domestic-oriented sectors, how are you looking at something like an FMCG, a hardcore domestic-oriented sector? This has been a clear laggard for a fairly long bit of time. Plus, we are hoping that, you know, the GST rationalization may be able to give some fillip to the volumes growth that have been absent from a long time, from many quarters for most of these FMCG giants. How are you looking at the FMCG space? Still, would you stay away from this one?
I think on the FMCG, there's no doubt there could be some bit of a volume growth which can pick up. Even the margin profile can improve in the second half, given that some of the raw material have eased. But I think from a consumption basket perspective, I think discretionary leg is something where we are more positive on. I spoke about auto. In addition to that, I think one can be selectively positive in segments like, say, for example, Tata Consumer or Marico, where the food segment of food overall contribution is higher, and that is where they can tap the unorganized segment in a far more bigger way. And besides that, I think you could have players on the hotel side, so the likes of ITC Hotel, Lemon Tree, or ITC Hotel. And in addition to that, I think we like EMS players. So these are good proxy consumption plays like Dixon, Sirma, and Number. So I think, so our sense is that in some of these categories, you have both volume plus value play sort of coming in. Not necessarily that you will have a higher income, you're going to spend more on FMCG. I think you're going to spend more on discretionary side.
Okay. How are you looking at the PSU space at large, Pankaj, at this point in time? Do you see, some sense of a return to the erstwhile favorite PSU basket? On Friday, we had seen the defense stocks on fire. Today, we've been seeing the railway stocks back in momentum. Of course, largely, both of these spaces are working with the new order inflows that have increased, and most of the stocks are reacting to that. But do you see some sense of PSUs as a theme coming back into action?
So I think within PSUs, one needs to be selective. So, for example, on the banking side, government is talking of second round of consolidation. Our sense is that
Right.
last time we had seen a sharper rally, but this time around, it does not look like we are going to see a sharper rally because all banks are on a pretty relatively good asset quality position, and valuation gains are expected to be limited. But I think when you
Right.
look at the defense side, I think things are a lot more interesting, and you
Yes.
have got a good tailwind for growth. So there we like companies like HAL, Bharat Electronics, and in case if we sort of
Right. Pankaj,
uh,
I'll have to just, stop you right there because we have a breaking news that's coming in. The chief negotiator of the US is going to be coming to India tonight, based on which the further course of action will be decided. Remember, this is big news, viewers, as far as the tariff announcements are concerned and the negotiation that will happen from hereafter. Remember, there are some issues that are not directly related to trade that will also be taken up at the diplomatic level, is what we are given to understand. Of course, it's not a round of negotiations, but a discussion on trade talks will take place. Remember, this visit is for just one day, and they will be here for the whole day, and they will also be deciding on the future course of action. Remember, we've also seen before this the top level ministers from both the countries. We've seen the president of United States, Donald Trump, come out on social media platforms saying that he is still hopeful that both the countries will be able to arrive at a negotiation that is a win-win both the countries. We've also seen Prime Minister Narendra Modi reciprocate the same and say that yes, he still values US as a relationship that we share with the country, and of course he's also hopeful that things will be coming back on track when it comes to negotiations. And we'll just come back to Pankaj on the front. Pankaj, I think this is big news that's coming in yet again. Some more hopes of a renegotiation or a rediscussion on that 50% tariff that seems impossible for our export-oriented sectors to really deal with at this point in time could take place. How are you looking at this fresh round of talks that could happen tonight and tomorrow?
I think if US is warming back to India again on the tariff front, I think this has been the biggest roadblock for markets to sort of sustain the momentum. And I think if we get enough clarity here, our sense is that we are headed towards far more better, higher levels, probably new high, especially on the Nifty towards by Diwali, because I think most of the domestic-oriented sectors have got a good amount of boost from the GST rate cut. I think it was the export leg, and also because of the fact that FIIs have been selling in heavy sectors like, say, for example, BFSI and technology. So that there we might get some respite. So a combination of these two, again, is a pretty good news for markets to sort of head higher and possibly towards new high.
Okay, got that. Pankaj, help me understand if the talks, are constructive. What do you see as an impact to the overall market sentiment as well? So far we've been dwelling on the hopes that the domestic news flow is somehow trying to cushion the impact from the external shocks. But if we are given to understand that, yes, the talks are progressing towards a positive side, that there could be a rethought as far as the 50% tariff is concerned. If the talks progress upon a positive side, what do you expect on the markets as a reaction to be? We are already at 25,100. Where do you see the markets headed?
So I think 3 to 4% or 3 to 5% kind of a move over the next 1 month if the trade talks happen on expected lines, pan out, I think is very much possible. So which again means that we could be sort of heading past the previous high levels.
All right, Pankaj, thanks a lot for sharing all that update. Viewers, we are now just going to be wrapping up the market for you. 25,069, 44 points lower in trade. So we have snapped the 8 days of a winning streak. But let's see and hope that tonight, when the US officials are in talks with the Indian officials on tariffs, there is something positive that the markets can look forward to as well. That's a wrap on Business Today's show. All your queries on mutual funds, markets, and your portfolio is something that you can send on the number that's flashing on your screens, and also on our social media handles. Also, don't miss the market opening show tomorrow morning at 9 a.m. with Haba Bakaya, giving you the first word on everything that will move the markets. Thanks a lot for tuning in.
From overnight global cues to live Dalal Street moves, we decode what matters for your money today. From stocks to sectors to the top business news. We've got your morning game plan covered. Watch me,